Hey everyone, welcome to the market review. Well, market went crazy last week. We had like two 2% up days on Qs 2.08 and on Friday 2.48 in the last couple of days. Like MU and SNDK did crazy moves on Friday, 15% and 16% or something like this. 16%, DRAM 13%. So crazy fucking shit, guys. So this is the heat map over the past week. MU plus 37%, Intel plus 25, AMD plus 25, even Qualcomm joined in. We have some big moves in names from the security stack because Datadog will had a huge reaction on earnings, like plus 30%, and this dragged the entire sector up, like Palo Alto, like CrowdStrike, CrowdStrike, and so on. So this is why they are in here. But aside from this, the market was pretty red overall, and we can see it from the breadth data, and it's going down. This sideways chop is not constructive, again going down, and we really didn't have many U-vol days. Like it was like 50 to 60 U-vol, sometimes negative as well. So this being said, I think we are very, very, very close to a short-term top. Not the We're still in a bull market until proven otherwise. But this type of move is not sustainable. I tried to look at a couple of historical comparisons based on what we have here. So I would have thought that this was enough to give us a top, but we had enough strength to give us a follow-up, another 2% day. So this was the second largest up day in this whole cycle, and it's a based on Friday's close is a 30%, 28% move from bottom to top. And before yesterday, we were at 25%. So this was the second largest green candle of the cycle. The only bigger one was this one here, the gap up, which is almost 3%. But aside from this, we haven't had a single big blow off move like this in a while. And I think it's possible that we may get another one, but it's likely going to get rejected. So we can gap up and go higher, but I think we will close red by the end of the day. Not necessarily a full engulfing candle, but we will close negative and the candle will be red for sure if we do another move up. And like I said, I tried to look at a couple of historical comparisons. I'll show a couple of them. Uh, the major takeaway from what I'm going to show is that I said that when we correct, we're going to correct to the 21 EMA. The 21 EMA right now for Qs is 7% away, which is going to feel like the apocalypse when it does happen. But it's going to take some time to meet it. So let's say it goes like this. And we make contact around here, let's say. It's going to be like 5%, something like this. But when we get this type of law of move, we tend to have a much bigger correction than just the 21 EMA. The 20 EMA is the baseline, but more likely it's going to be more than that to the 44 EMA. So that means 6-7%. And again, I'll look at a couple of comparisons and explain the situation for each one. First one, we have this 2025 one from the tariff tantrum. It came on the back of the news, so basically we had a 4% gap on news here, then follow up, and we went higher. This is normal. I think we also had breakaway momentum and a breadth for some around here, so it's completely different situation than we have now. Now we have decaying breadth. We have new all-time highs on record low participation in the market. It's very, very different. Then we compared to this one. This was at a plus 144. It's a bit different because this one was more healthy, but even then we corrected and we went below the 21 EMA. We went to the 55 and even lower. This one here is somewhat similar, like a 2.56, and we went higher afterwards. But I would say this is a lot more healthy as well. Like every time we didn't have a clear vertical move. We had sideways, we consolidated, we had a pullback here, another pullback here for the double test of the 21 EMA. We kind of went up hugging this surge, pullback, and we were coming after a rebound retest, and it was like an impulsive move. It was the initiation move of the trend, not a top in any way. So this makes perfect sense that it went higher. Then in the bull phase, in the bear market here, again, mm, a bear market rally here. We had a 2.72, kind of did a pullback to the 13 EMA, which is somewhat healthy, but it was close to a top, and we didn't go much higher beyond this point. This one is very similar to what we have now, like a 1.55 and then another 1.72. Then went a bit sideways and began a bear phase. This one also similar, like a 1.6 and a 1.28, and then we did correction sideways. This was a top building the beginning of a top. Some similar ones, this was the 2020 blow off top when the Tesla and Apple stock splits happened. A 0.79, 2.14, we went a bit higher. This is kind of the candle I expect, but a rejection. And the point of this one is also that we corrected much lower than 21 EMA. We went a lot lower than that. This one may seem similar, but it's not because it comes out of consolidation. Again, we were just retesting things. We went higher. It makes sense to go higher here. The fact that we got a market crash afterwards is irrelevant. This one is somewhat similar, like major leg up. And at the end of the trend, we get a plus. This is a reversal, so it's a bigger candle. And then we get a plus 127, go sideways, and then correction that was bigger than anticipated. Same here, like correction was bigger than anticipated and it was a top building thing. This one is similar as well, like a 1.7, we went higher, overextended, and the correction was much bigger than anticipated. Same kind of thing, correction was bigger than 21 EMA, and so on and so on. Let's see if we have anything else special. No, most of this correction was bigger. Let's see the ones from the 2009 bottom. So basically, huge run up, and then we have a 2% day here. It at a minimum, like we could have something similar to this. Like this was the beginning of the bull market, so it makes sense the way it happened. We are at more towards the end of the bull market than the beginning, but overshot the 21 EMA, went to the 34. Similar situation to what we have now. It could happen again. This one was an exception, but again, consolidated here, and I would imagine this had some news, and also like it was a sideways consolidation with the market didn't go higher for quite a while afterwards, and basically went sideways for what is this? This is July, and went sideways until August. So it had a sideways consolidation for an entire month. It actually went to the 34 EMA, even though the low of this thing is basically this. So we didn't go below the low of this candle, but we didn't go higher for an entire month. And given how trained the market is to squeeze like it's been doing lately, going sideways for a month is going to feel like a correction. I wanted to check the ones from the 2000 bubble as well. Those are the last ones. So 2000 bubble, and remember that we had huge swings. This is 14%, 16%. Then we had another one in a short amount of time, another 9%. No, 14%, sorry. Another 40%. Even the small ones here, like this one, this was 6%. Um, this was like 6% as well. This one was 10%. So if we are in an environment, if we are going blow off top 2000 bubble like, these things become normal. And I just showed like how high we are compared to the 21 EMA. This was 10%. So another day like this puts us as 10% above the 21 EMA. And we corrected and retagged it in 2 candles here in the 2000 bubble. Because it's becoming so fucking volatile to the upside, this can happen as well. And again, it tends to overshoot. It doesn't go to the 21 EMA when this type of blow off move up happens. It just goes overshoots, and we did 15% in 1, 2, 3 days. So this we close. Let's do it relative to the close. So we close here, and relative to the close, we did minus 15% in 3 bars. This is a day. This is not a weekly. This is a daily chart. 3 days minus 15%. This was minus 6%. This was the middle of the bubble. Like we went from this level, we went another 49% up. The upside volatility will very quickly become downside volatility in this kind of environment. It's pretty fucking crazy. And another thing of concern is VIX close green, VVIX making a higher low. So again, relative to the close, VVIX is starting to make higher lows. VIX not quite there yet, but it will follow. When VVIX starts making higher lows, expect VIX to wake up very, very soon. And the funny thing is, it's not going to matter what happens with the war anymore. Like we might get some actually positive headline news for the war, and the market can dump anyway, because it's basically priced in. All of like I'll show it again. We are at a 28 fucking percent move in what? In 28 bars, 49 days. So in 2 months, almost 28 bars. Yeah, 2 months almost. We went up this much, 1.5 months. Sorry, we went up this much. So the there is no real worst scenario that will play out that justifies this. Like even if there is peace tomorrow, Hormuz is closed. We lost 1 billion barrels of oil for the year, and it's gonna take months to get back to normal. So this is what is priced in is way, 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 way beyond Goldilocks. So we might get a situation in which we get positive news and somehow the market dumps anyway. And it goes not to the 21 EMA, it goes to the 44. And just projecting these, let's see what that 34 EMA correction does to us. And again, I'm gonna price it in, let's say in 5 bars. So let's assume we do it in 5 bars. It's 8%. And again, 8% from these levels is going to feel like the apocalypse. It's going to be pretty fucking crazy. I'm not saying that it's going to be 8%, but historical comparisons suggest that when we correct after this move up, it's going to be very swift and brutal. Uh, mm, Price has moved way, way, way too fast to this area. Like I'll take SNDK as an example. So we have very little consolidation. We went from here to here, which is like what, 30%? 50%. We went 50% in 5 bars. That's a week, guys. So we went plus 50% in 5 bars and 1, 2, 3, 4, 5, 6 bars. It doesn't count the initial point. So we went 50% in 6 bars. There is not enough consolidation in this area to provide reliable support or resistance. So when we correct, it's very easy to see like a full retrace of this. If this goes to the 44 EMA, this is going to be minus 50%. It's going to be less than that, but it's going to retrace the entire move very, very quickly. Okay, so all this bear porn seems very strange, given that we're still bullish. But again, it's very, very likely to begin happening sometime next week. We have OPEX as a trigger as well. I think it's plausible that we go to the 7500 one very quickly and then start correcting. And when we do correct, we correct big. In this scenario, target will be around here. So this is kind of what I think happens next week, or begins to happen next week. And when it's going to happen, it's going to be very fast and brutal. If we get another day similar to what we had on Friday at the index level, I don't care about my stock picks or anything like that. If you are in anything but these names, basically, you haven't done very well in the past 2 weeks, 2 to 3 weeks. So if you are in these names, you're pretty much not very happy right now. But if we get another move up, like the one we did on Friday, I think it's safe to get out of everything, because like you should be taking profit on the explosive names like MU, Intel, and everything else. But I think the other names are going to be get hurt as well. I don't think we are way too overextended on those names for the market to reliably stay up without going down. That's why I think we risk like a 10-15% correction, similar to what we had in the 2000 era. It's uncharted territory for me, so take it with a grain of salt. But these things did happen, and it's looking like we are in an environment very similar to that. Like the way we went up in the past month and a half is somewhat unprecedented aside from this part here. So if that is the only historical analog and it behaved that way on the upside, or it's starting to behave this way on the upside, why would it not behave the same way on the downside? Until it proves to be different in nature, I will use that historical comparison and assume that we will be doing somewhat, price will be doing similar things here. And I would rather lose out on the upside. Maybe we continue going up another like 5% on the index. I would rather lose on the upside from that and load up when we do get a correction later on, because it's inevitable that we will, than risk being caught on the wrong side if we begin that correction and I'm still in, because the losses are probably going to be much greater if that happens. So yeah, that's kind of it for this one. I'm a bit confused. Like I tell you, I'm hoping this provides some guidance, but I don't know what's going to happen. And yeah, that's it for now. Have a good one. Bye bye. Sorry for the rant.